All right, so I'm going to look at the gold market. For those of you that are brand new, this is cycle analysis, where we look at the energies in the markets. On the left is the weekly chart, on the right is the daily chart, and we've had a little bit of shifting here. And you can see specifically on the daily chart right here, where you see that grayed out, or what we call ghosted cycle bracket, and then the dotted one, which is where it has shifted out to the right and a little bit longer. Each of these yellow ovals that you see are the periods where it is late in the cycle. That is where money flows out. So this is a declining phase, a bottoming phase, a rallying or positive phase, and then the peaking phase, which occurs over here. The shape of the cycle is very important to us. The momentum conditions are very important. I have our momentum indicator here on the weekly, which is the reversal scout, and you could see it turning up right over here. And I have the slim ribbon over here, which has been very choppy. When you see the slim ribbon just kind of sitting on itself, it's not giving much in the way of indicators. But when you see it widening and moving up, you can see how positive it is. And when it's widening and moving down, it's negative. And the bars are colored red or green, depending on if it is positive or negative. On the bottom is a slim ribbon PO, and this gives you a good example of how choppy the gold market has been in this corrective period. Let's blow up the weekly chart right over here. And we have upgraded this. And you could see this note, we slightly widened the cycles and shifted slightly to the right. So what does that mean? Well, you can see in here as we look at this, that the big cycle right over here, or the dominant one right there, is broken up into three minor cycles. And you can see 1, 2, and 3 and how that lays out. And now what has just happened is that the first cycle in here extended out just a little bit. That did have me confused, though I said that the likelihood of an upside move is pretty high. I thought it was a second half story, and it still very well may be, but at least now for the intermediate term, this has improved. So if you look at the first of the three minor cycles right over here, you can see that that looks pretty similar to what we had here, except this was more of a triangular formation. In our cycle analysis workshop, which you can learn about by going to our front page, you can see that what happened in here is that the minor cycle, when it came down, was meeting the upside forces of the larger one right over here. That is why a triangle formed. As this corrected, but it couldn't go down far, as it came down to close to that 50% retracement and then began to move up. And then it broke out of the triangular formation, which tells us that this new cycle is taking over, joining the upward pressure right over here. It's not exactly what I had expected right now, but that's what's happening, and we are agnostic. We let the market tell us what's happening. Momentum improving, breakout of the cycle pattern, now in rising phase, and this means that it's likely to continue higher. Now, resistances over here, 2120, that other peak at 2152, the 78% extension, 6.8 extension right over here is at just under 2200, and then this one way up over here is at around 2290, close to 2300. So any of these could be hit right now on this upside. You can see the buying coming in. If interest rates go down as I expect and the dollar goes down, you could expect that gold could go up very sharply in here. So this is a very bullish occurrence when you look at this. So now I'm looking at the shorter term in here, and you can see how this lays out. And again, there's that shifted cycle. The next period of risk begins sometime out over here in late March or early April. So there's a pretty good window for advance right now. Again, this level right over here is at around 2117. It was 2120 on the weekly chart. And this one way up over here at that other resistance is at around 2170. I think there's a pretty good shot that it moves up to 2170. So the question is, do you buy it today? Do you buy it now under these bullish conditions? Or do you wait? Do you wait for a pullback? Well, that's a hard one for me to say. All I can tell you is that everything I'm looking at is that the momentum is turning positive on the weekly. The cycle is turning up. The momentum here on the daily has gone from bearish to neutral, but has not turned positive yet. And I simply believe that any down days in here are going to be false and temporary and likely to move up again. So I think 2120 to up here to that high of 2170 is a very reasonable expectation over these next several weeks. And then some sort of a pullback over here, potentially with a buying opportunity, and then moving up again. You can see I have the peak set over here on the weekly sometime early April. And when I look at this cycle right over here, that one has a trough way out in May. So that says to me that this whole cycle, the next one out over here, could also be a very good upside move. So it could correct over there and be powering to the upside again. So I say this period over here in late March, early April is another buying opportunity. Either way, you can buy it now, you can wait for downticks, you can wait for this buying opportunity over here, but then you face a potential for a runaway market. This is turning into quite a bullish condition. Once this daily turns green over here on the slim ribbon PO and the slim ribbon then begins to widen, that will be an indicator that this could be an upside runaway. Bullish intermediate conditions here in the gold market.